That's right. Oil price is actually lower than before the conflict started. I think you've got to think about how much excess inventory is in the market. We talk about a tight market, but there's still plenty of excess coming from volumes from Iran, Libya, now Venezuela, and that's got a bit of a sort of dampening effect on oil prices. But having said that, if you look at the back end of the curve, we have seen some movement simply because we're starting to price in what could be a risk to future capacity. And I think ultimately, Steve, one of the things that I've noticed is this sort of pendulum swing between a risk discount, which is anchored on demand, weak demand, that's been the theme for years, and versus a risk premium, which is we've got weak, lower spare capacity, we're going into a tighter market, and this pendulum swing, we've seen it several times, went up to $95, we've gone back to $85, so it's fair to say we'll see a lot of volatility. I think that volatility will edge up over time, but until the market recognizes that we have a lack of spare capacity, you've got 4 million barrels, or 4 to 4.2 million of OPEC spare capacity, world demand is around 102. I've never seen it that low in terms of percentage terms. We're now sort of around 3% of total demand, so anything can move the price up very quickly.
Yeah, and I totally take on board your point about the volatility as well, but the other side of the coin, and I know that we've actually taken this position in debates many times, and I think that's the point, and why not? There was something that happened while I was away. I had a few days off, but I kept an eye on what Karen Arabile were up to. And they were also looking at Maersk. Mm-hmm. And the reason why I mentioned Maersk is because it is one of those brilliant barometers for global demand for shipping. It's a great barometer for China, for those Asia, West Coast US routes. And if Maersk is cutting 10,000 jobs and seeing its profits plunge, that says to me that there is a demand problem either here, clear and present, or actually coming down the pipe.
You're absolutely right. They built a huge amount of capacity, particularly through the Russia sanctions, and I think at this point, having seen them take capacity off, you can look at shipping as a bit of an uncorrelated feature to oil, and it's a leading indicator.
Yeah, I think it's a great barometer.
You're absolutely right. I think demand, one of my concerns around looking at these data points on demand is that we tend to take the under. We tend to think that we're seeing weakening trends, and then we see upshoots, whether it's because of services like travel. I know you've got Thomas Cook on a moment later talking about how much people are still traveling. And one of the things I'd look at outside of shipping capacity is airline capacity and autos capacity. Because right now we're bottlenecked. As we've seen more airline capacity come online next year and the year after, and then autos capacity and hybrid vehicles, you should see supply-induced demand, which is the more that capacity comes on, the more demand for aviation fuel, for gasoline fuels. And that should see or help demand stay robust.
So you said hybrid, not EV.
Yeah, I said hybrid.
Yeah, no, you're very
getting very expensive, Steve. I mean,
they are. Getting
hard to work.
I've said the audience many times. I won't buy an EV until I can afford it.
Don't crash it either. I mean, if you crash it, you may not see it again.
But in all seriousness, the way that the Chinese are doing something amazing on EV production and EV consumption, does that not send shudders through the gasoline usage debate?
It is and it isn't. You sort of have to think about China as a bit of an isolated market in terms of China demand. China demand, I think we're bottoming. Very important. I mean, to look at shipping capacity, everything kind of gravitates towards China, as it always has done. I mean, we've been through trade wars, now going through recession, COVID. And I think one thing to keep an eye on outside of China demand is that penetration of EVs. But think of demand as a bit of a sort of running to stand still. For every kind of penetration of an oil barrel, because we've seen efficiency or an EV in one part of the world, we're seeing new demand emerge in another part of the world, as in we're going from negative to positive. And if you just look at demand growth for the last 30, 40 years related to population growth, it's 1-to-1. So as long as the population continues to grow, we see demand growth continue to grow, despite the savings that we're making in EV.